we may be able to start valuing companies based on how many NVIDIA chips they have. I know it sounds ridiculous, but hear me out. I was doing some research into all these hot data center companies, all these essentially meme stocks right now. And as I looked into it more and more, it's clear that the business model of some of these data center companies, think your CoreWeave, think your Applied Digital, think your NBiz, these companies' entire business model is buy as many NVIDIA chips as you can, therefore you can produce more AI compute and sell or rent that AI compute to whatever companies need it for whatever reason, right? Probably training their AI large language models, whatever it is. The point is, the more NVIDIA chips they can bring in, the more revenue they can generate because of this limitless demand. And so I thought, well, let's look at how many NVIDIA chips each of these companies have. Maybe there's some correlation to how they're valued. And I know it sounds silly, but hear me out. These numbers turned out way more perfect than I ever would have expected. It's going to surprise you.
I know this isn't the prettiest of presentations, but bear with me for a second because this is pretty fascinating. So essentially, I went through and found some of the hottest, some of the most meme-like data center stocks that I could right now, and those 5 being Iron, CoreWeave, Applied Digital, NBiz, and Oracle. Even Oracle, the $1 trillion company. Now, like we mentioned, we're trying to find how many chips, specifically NVIDIA chips, in their data centers or contracted to get at some point in the near future. Now, some of this information is publicly disclosed and pretty easy to just copy and paste. Like we can see, for example, with Iron, they made it nice and easy for me in their 10Q. Clearly stated what chips and how many of each chip they had. But that unfortunately wasn't always the case. Not 100% accurate, but you get the point. This is essentially an estimation of how many chips these companies either have in their possession or plan to have in their possession soon. CoreWeave and Oracle in particular, they're the bigger companies. Oracle has a market cap of roughly 1 trillion. CoreWeave has a market cap, I think, around 60 billion nowadays. There's some assumptions I left right here, and they vary case to case. It's not entirely uniform. So now to the results, which they worked out way too perfectly. And again, there's a lot to scrutinize here. You could probably make an argument that none of this matters for a variety of reasons, but bear with me for a second. So I have the companies by market cap. So obviously Iron, one of the smaller companies in orange here, and Applied Digital, another very small company. But this column is the interesting one. We're taking the company's market cap at a point in time divided by the amount of chips that they have. So just think of it as how much is this company worth compared to every NVIDIA chip that they own. Because remember, these companies for the most part are reliant on their data center revenue to provide them growth and provide them profits in the future. And therefore, you'd expect that a lot of their market cap is derived from how many NVIDIA chips that they actually own. And so you can see these numbers are very different depending on the company, right? We have Iron in orange here that has a chip value divided by market cap, $430,000 to $489,000. We have Oracle over here as of May 25th, 2025 with a $500 billion market cap. And their chip value is obviously much, much higher at 1.1 million. We have to normalize these numbers because they're so radically different right now, and that makes sense. Iron, for example, has a Bitcoin mining side to their business. Their revenue from Bitcoin mining makes up about half of their business compared to what their data center is expected to be in the coming quarter. So hence the normalization factor, just think what percentage of the business is actually AI cloud compute? How much of their revenue can we attribute to data center related business? And like we said, it's about half Bitcoin mining, half AI cloud compute for Iron. For a company like CoreWeave, their entire business model is just buy the shit out of NVIDIA chips until you can't get any more and hopefully rent out that limitless demand that they say is in the market right now. Same thing with Applied Digital. They've essentially converted their entire Bitcoin mining operation over to renting out business AI cloud compute. Again, similar to Iron, they were more of a Bitcoin mining company, but said, hey, we have all this compute power. Why put it towards the rather unprofitable world of Bitcoin mining right now and put it into the frothy and very, very happy industry of AI cloud compute? NBiz, same thing. They are now pretty much all AI cloud compute in terms of their revenue. And Oracle's the interesting one because Obviously, as a massive company, not all their revenue is going to come from data centers and cloud compute, right? They do a lot of other things. They have a lot of products and services. And they estimated that right now and in the near future, their data center division is going to make up anywhere from 20 to 30% of their revenue. That's gonna grow with time because, as we talked about with Oracle, I mean, they're projecting a 14x in cloud revenue over the next 5 years, from 10.3 billion fiscal 2025 to 144 billion in 2030. But nonetheless, right now and in the near future, that segment makes up about 25% of their revenue. And just look at these numbers over here. All of a sudden, these numbers just got a whole lot closer together. We're talking about really outside this one outlier in applied digital, these 5 different cases are within about 20 to 30% of each other. And just think about how abstract this approach was. Find a data center company, estimate how many chips they have if it's not abundantly clear, divide their market cap at a point in time by the amount of chips they have at that point of time, normalize it based on how much of their revenue is actually coming from these NVIDIA chips, and you have this estimated chip value. In other words, what one NVIDIA chip is worth to this company towards their market cap. Now again, sounds crazy, but what's even crazier is how close these numbers really are together. Let's do a little bit of a sanity check here. We have an estimated NVIDIA chip value towards a company's market cap of $235,000. For our sanity check, why don't we go straight to the source? Let's see what CoreWeave, the data center company that's put all its eggs in one basket, buy as many NVIDIA chips as you possibly can, take on as much debt as you possibly can, and rent it out to whoever needs it. Let's look at their rates. What are they charging per hour for usage of a GPU? And let's just use the B200 for an example here. We can see this is actually made up of 8 GPUs. So let's divide this by 8. We're talking roughly $8.50 an hour per GPU. And so for the B200, we're talking roughly $8.50 per hour per GPU. Let's assume they're renting out all of these GPUs 24 hours a day, 7 days a week, times 24 hours, times 7 days a week, times 52 weeks per year, because we do want to see how much it's influencing their market cap on a yearly basis. I think that makes more sense. Investors like to price into the future. And so after some calculations, this is for the B200. CoreWeave has about 2,500 of those. This comes out to roughly something around $160 million of revenue. And then they have 250,000 H200s. So if we do the same math here, this time I'll show you the rate for an H200. Let's use this row right here. We got $50 divided by 8, about 625. So per chip, that's a rate of 6.25. We multiply by the amount of hours in a day, by the amount of days in a week, by the amount of weeks in a year. So the chip value on a yearly basis, and multiply by the amount of chips they have. This is going to be a big number, 250,000 of those. We get, what is this, 13.65 billion. 13.65 billion in chip value based on our math here. So 250,000 H200s comes out to roughly 13.65 billion. Rough estimate, round up here, and we'll say it's 14 billion of value just from their NVIDIA chips alone, which is basically their whole business. And so, does it equal their market cap? Well, definitely not. They're valued at 65 billion. Clearly, there's a lot of growth priced in here. After all, the projections that they're making are massive. The amount of growth that they're experiencing in revenue is massive. And so this number is due to be a lot higher. I think CoreWeave's probably on the higher end of an overestimation. But if we do the math for a company like, let's say, Applied Digital, and what do you know, the estimation of Applied Digital's market cap based on purely the NVIDIA chips that they currently have and the GPU rates that are on CoreWeave's website comes out to about 8 billion. And what do you know? The company's valued at 6.4 billion. This isn't perfect. Obviously, estimating market cap just from the value that you could get from NVIDIA chips alone is a little sneaky and would be absolutely insane if it worked out to be perfect. But Nonetheless, I thought this insight would be interesting and something to review, something to look at, and maybe by looking at this stuff, you can see, hey, what data center, based on the amount of chips that they have in their possession or will have in their possession over the coming years, who is under or overvalued compared to this analysis that we just performed. It's crazy that estimating Applied Digital's market cap purely from chips was not terribly far off, especially as they continue to grow very quickly. You'd imagine that $8 billion market cap makes a lot more sense. For shits and gigs, let me check Oracle's real quick. This would be interesting. Oracle's comes out to about 61.5 billion, but considering that AI cloud compute only makes up about 20 to 25% of their business right now, we'd ideally multiply this by 4, and that's 246 billion. Again, it's not perfect. Obviously, I mean, we're sitting at about half of what the market cap was at this point when they announced this massive chip order. But again, investors like to price into the future. You can see with all of these, depending on the rate at which they're growing, which CoreWeave is absolutely exploding. Oracle is projecting a 14x in their AI cloud compute business by 2030. It makes you think, maybe Applied Digital has some room to run here, because we're not quite pricing in their estimated cap from chips alone as much as these other companies. Now again, there were a lot of assumptions that went into this. We used CoreWeave's pricing data. We used each company's 10Q if they had information about how many chips they had in there. I even estimated the amount of Applied Digital chips that they would have based on the power that they're contracted to provide. But at the end of the day, I think there's some good insight to be had here. This really all comes back to what we just talked about in the last video, right? AI spending is everything. If AI spending goes away, we're all screwed. It doesn't matter which way you slice it. The stock market's screwed. If the stock market's screwed, businesses start laying off. If businesses start laying off, people get really sad because they have no jobs, they have no money to spend, and it's a self-fulfilling cycle that the economy doesn't do so hot. So again, let me know what you guys thought about this. I thought it was crazy interesting just to see how close the comparisons really were and how valuable that might be going forward. Estimating market cap, maybe that's a hint at Applied Digital, who knows? Not inferring anything here, but I hope you guys enjoyed the video. Subscribe maybe. Subscribe if you're not weird and you support the AI revolution. Or if you don't support the AI revolution, subscribe anyway. Alright, I'll see you in the next one. Peace!